What's up, YouTube? Silver Dragons here. Thanks for watching. Today, we're talking about the future of gold and silver. Where are they going to be going in the coming years? I'm really excited because I am joined by Lior Gantz, the founder of Wealth Research Group. Always good to have you on. How you doing, Lior?
Good. Happy to be on.
Yes, okay, so first off, let's talk about the Fed. They are possibly going to be starting the pivot as early as December. We're not really sure yet what's going on with the Fed pivot and how is this going to affect precious metals.
Okay, I just got off the phone with Jerome, so let me tell you exactly what's going on. No, I'm kidding. I have a bit of a different perspective on this than most. I don't think that most sophisticated investors on Wall Street are going all in or are banking on a pivot just yet. And let me kind of explain this. If you look at my name on the screen, it says wealthresearchgroup.com/ZERP. ZERP is acronym for Zero Interest Rate Policies. If you haven't downloaded this report, wealthresearchgroup.com/ZERP, I think you should. The reason is in February of this year, we put out this report and it basically said, trust us when we tell you that the zero interest rate policy era is over. There will be no zero interest rate policies anymore. And everyone is like, oh, they'll raise once or twice or three times, then they'll pivot, they'll fold, they'll panic, they'll do this. No, we have exited the zero interest rate policy era. We are not going back. When we talk about a Fed pivot, to pivot is to go from here to here. And meaning that if they were meaning to do a 75% rate hike in December, on December 15th, they will probably pivot to a 50 basis points. That's a pivot. When people talk about a U-turn, that means that they'll start cutting or at least pause and then maybe later cut. We are nowhere near a U-turn. I don't think we're near a halting. I think that we are very near either a pivot, meaning we'll see a 50 basis points in December, or a 75 plus encouraging messaging on the next Fed meeting, meaning that they'll say, hey, I think there's a chance here that we're on the right track. But inflation, in my opinion, is deceiving. It's going to toy with us. So if you're looking at this from what to do with gold and silver, I can get to that later and where gold and silver are going. But do not think this is cut and dry, what we saw last month. It's not. For now, encouraging data, no confirmation yet that this is a real trend.
So whether or not the Fed decides to pivot at the next meeting or the one after that, let's just say they decide to pivot in December, is this going to be the time where gold and silver start to flourish, or would it be the U-turn down the road?
Okay, so obviously I have no idea when gold and silver would do that. What I'm going to tell you is what the probabilities are and what I think is really important here.
Sure.
I think for one, the hedge funds I'm speaking with and the vibe that's going on is most of the fund managers on Wall Street that actually have good returns think that inflation is deceiving. In other words, it broke down this month, but it might spike again next month and then break down. And then, so they don't think that there's a real trend yet. We have seen and we are seeing definitely behavioral changes. We're seeing Facebook, Amazon, Google, startups, etc., firing or not hiring or freezing development, freezing R&D, freezing projects. That is exactly the disease that the Fed was after. The Fed was after the disease of growing for the sake of growth, creating all this froth and excesses in the economy. And we are seeing the changes. So what they're doing hasn't really helped with the CPI numbers. They're 7.7. That's outrageously high, but it is trickling into the economy for sure now. We've already seen the markets discount so much. And I think that when it comes to what is great for gold and silver. So for silver, what is really important is a breakdown in the dollar. And I created a report on that matter because I think the dollar is in a point where the next time it peaks or cracks is going to be generational. In other words, I think that once the DXY goes below 100, it's going to go to 85 or 80. I think we're going to see a multi-year move down in the dollar that's going to be really big. So if you want to go to wealthresearchgroup.com/fake, and I say fake because it's a fake haven. We've seen this year in 2022 money flow towards the dollar as a safe haven, but it's really a fake haven. All this cash that's come towards the dollar because U.S. bonds are paying the highest yield in all of the developed world is an illusion. It's an illusion, and I think that once the Fed does its pivot, it's going to start cascading. This is the most bullish. Hear me out. The most bullish Wall Street has ever been about the U.S. dollar. We are now the most crowded trade on Wall Street right now. This is a survey of, I think, over 500 fund managers managing over $1 trillion collectively. The most. This is for Bank of America. The most crowded trade is long dollar right now on Wall Street. When have you ever seen that? Once the Fed pivots, in my opinion, Q1 of 2023, and by the way, the next CPI numbers come before the next Fed meeting, not like what happened now, where the Fed spoke November 2nd, then CPI came out. December 9th or 10th is the CPI. December 15th is the Fed. So the Fed is going to have another CPI data read before their next meeting. If it's encouraging again, they'll do 100% or do 50 basis points. If it's not encouraging, they'll do 75 basis points. That's my opinion. As it stands right now, I think we're going to be in a frozen market, a stock market that is, that just wobbles around for months and months. I think we're going to see the same thing with gold and silver for months and months, just going to wobble around until such time as either the CPI numbers are really encouraging, meaning peak inflation, and counterintuitively, peak inflation is when gold and silver, especially silver, start to bottom. And as the Fed continues on their path, I think what's going to surprise the market is that the Fed is not going to cut. I think that they will leave interest rates very high for way longer than people think, perhaps throughout this decade at 4 or 4.5%. I don't think they're going back down. The key thing that's going to really spark the bull market for gold and silver, and I do think that gold is going to go above 3,000 an ounce between now and 2020, in 2025, 2026, and I think that silver is actually going to about 60 an ounce during the next 3-4 years. The thing that's really going to change that is how long it would take to lower inflation. I think it will take longer to people realize to lower it from the 7s to the 5s to the 3s. And that will put a huge impact, negative impact, on the dollar. And you will see the trade towards commodities become a huge trade. If bonds are yielding in real returns on the 10-year 4 and 4.5 or 3.5, if you're able to make those kind of returns, the stock market is going to be in a sideways trading form for years, and that plays so well for alternatives like gold and silver, specifically for silver. So I think we are there's no rush, and we are heading into a generational bull market for silver, a good bull market for gold, and a generational bear market for the dollar as we go into 2023 and the second half of that year.
So really the Fed pivot is sort of just kicking off the party. It's not necessarily going to be the biggest driving force. What we should be looking at is inflation, how long inflation stays high, and then also the strength of the dollar. Once we see the dollar start coming down, that's going to be the biggest thing to push precious metals prices up higher. So if we do see the Fed pivot in December, silver's probably not going to spike up immediately, right?
I think that even if we get an encouraging data in December, the Fed is very, very afraid of repeating the same mistake it did in the 1970s and mid 1970s when it did a victory lap and said, hey, we crushed inflation, we're good, the oil shock is behind us, and it started loosening again, and then inflation, boom, it shot up like crazy. So they will over tighten and they will stay the course for longer than Wall Street is currently ready for. And I think that that's why even in December, I don't see a huge spike in precious metals. The fact that silver is already at 22 is very encouraging. And I think that what you're probably going to see in the next few months is once the markets really start to believe, and I think they will believe it first. The data is always going to come next. Once the markets believe that they've seen enough to where they think the Fed will start to halt or slow down the pace, I think silver will start to move, but it will take the stamp of approval of the Fed for silver to really move. If you remember, when Powell said we are retiring the word transitory, that was the day the Nasdaq peaked. On the very day, go to November 4th, 2021, when the Fed gave that stamp of approval, the Nasdaq bull market was over. A 13-year bull market was over on one sentence because it reflected the change in stance. Once the Fed reflects that change again, then you'll see that real change in silver. And I think that the bull market in silver will be stronger if we are able to avoid a classical recession. If we're not able to avoid it, I think that silver will go down hard first before creating that bottom. That's why I don't think it's time to go all in on precious metals yet. And I think that time is on your side because you're really able to look at this. It's the Fed is going to give you the best opportunity of your life to get in on this trade because it's creating the bull market. But what it's doing right now is the author of the next bull market. It's authoring the next bull market right now.
Yeah, if we do see another dip in precious metals prices, this would be great for those of us that are stacking, physical silver, physical gold, because we can acquire more at a lower price. So a dip before the rally would be great. But if the rally is around the corner and this is the lowest we're going to get, that's fine. I mean, my strategy is just to dollar cost average, buy a little bit this week, buy a little bit next week, and then over time I'll have an average price I paid for my stack. But yeah, I mean, obviously, if the price goes down over the next few months, that's even better for me personally, and I think a lot of stackers would agree with that. But also your assessment for the next few years, we're probably going to see a massive bull run in gold and silver. You're calling for $3,000 gold and $60 silver in the next few years. I think that's a really bright future for precious metals. I'm excited to be stacking them right now. Hey, Lior, it's always great to talk to you. Thank you so much for your time, and we look forward to talking with you again in the future.
Thank you, sir.
All right. Well, I do want to say a massive thank you to all of you so much for watching this video, and I will see you all in the next one. Silver Dragons out.